Hey, what's happening, ladies and gentlemen? Alex Eskimoy here, aka the Data Doctor, and I am back this week. We are going to be covering customer cohort analysis. So, this is one of the techniques that we use in customer analytics, and it's a super valuable technique. It's one that's very important when it comes to financial modeling or just customer analytics. If you're in startups, if you're looking at anything on the financial modeling side, if you are building out a company, this is something that you're most definitely going to need. Anytime you talk with any funders, any investors, any VCs, they're going to be asking for this type of analysis. So let's go ahead and dive right into exactly what we're going to be covering today. And I'm going to apologize right now if I'm a little bit groggy, coffee a little bit, and my throat is a little scratchy. I've been a little bit under the weather, so I'm not live on camera today, but I just want to go ahead and make sure that we are able to keep on going and cover some of these type of analytics so that you guys can get the most out of this. And as always, if this is something that you need for your business, feel free to reach out. Happy to provide a consultation. So let's dive in. So we're going to take a look at these 7 different types of cohort analysis, and they all build upon each other. So we're going to build each one of these out in Tableau today. I'm going to show you exactly how to do that with our Superstore sample data. And we're going to start off doing a simple cohort analysis, which is essentially just by customer count. Then we're going to take a look at retention analysis, net revenue by cohort, then something called net dollar retention or NDR. And that's something that is super important for measuring the performance of cohorts over multiple periods of times. And then we're going to also look at something called cumulative lifetime revenue by cohort, customer. So this is cumulative by cohort, but customer is going to be per customer. And then finally, we're going to use that to calculate customer lifetime value. So if you guys have ever been confused about how to get to customer lifetime value, this is actually going to show you how to do it. This is how I've done it in multiple organizations for multiple clients. This is a very popular metric, and a lot of people just try to total up all the revenue that they've generated from clients. It's not the right way to do it. You have to group it by cohort, and then you have to weight it based off of the number of periods that they've been with you, whether it's months and quarters. All right, so let's go ahead and dive into Tableau, and let's go ahead and build this out. So let me grab my Tableau workbook over here. And so you can see I'm going to go full screen so you can see everything that I'm doing over here. And so let's just grab our sample Superstore data set over here. And so we've got all of our orders. This is a familiar data set to many people. And what we've got over here is customer name. So if you're working with your own data set database, you might have customer ID instead of customer name. Whatever it is in your system, you're going to want to use that unique identifier. And so depending on how your data is structured and whatnot, it could even be email address in some case. I remember we used an email marketing program and everything was tied to email address. It was painful to deal with that and some duplication errors because sometimes you'd have more than one customers in one system and they're both mapped to the same email address in a household. That's for a whole nother conversation another time, but what we want to take a look at is going to be order dates, right? So I'm going to right click and drag this to columns, and let's take a look at this from a quarterly perspective. Okay, and whoops, I actually want to select that as the continuous quarter part, and then I'm just going to set this as discrete. So now we've got all of our quarters going across. What we really want to see is the first order per customer. So I'm going to create a calculated field, and we're just going to say first order date per customer. So this is going to be a fixed level of detail calculation, the customer name, and then we're just going to grab the min. So min order date for each customer. So what this is saying is that for each customer, we've got a bunch of customers. They've got multiple order dates. I want the minimum. So that's going to give us the first order date that customer has for that particular customer. And that's going to essentially allow us to build this cohort. So this is going to be the full date. I'm going to right click and drag and do the same thing. We want the continuous quarter part over here. And I'm going to change this to discrete. And so now you can see that we've got this diagonal chart over here showing the quarters. And excuse me. And this is exactly what we want when we're looking at a cohort chart. So what we want to do now is just, I'm going to right click and drag this on here, and I want to count distinct customer. And now you can see we've got our cohort analysis right here. So this is the very first chart that we're talking about. I can even grab this and drag this over here to colors. Let's make those squares. So now you can see where our customers are over here. We've got some blanks. But this type of cohort analysis is a little bit hard for us to compare, say, apples to apples. So we'd have to look at this diagonal over here to understand that this is the first month, or first quarter, I should say, in which a client did business with us. And this is the quarter in which they started, right? And so that is fine. But when we go across, it becomes a little bit more difficult because we want to compare things in our columns so that we're looking to apples. So what we're going to do is another calculation over here. So I'm going to create a calculation. We're going to call this elapsed quarters. So what I really want is to, it's going to be a date diff. And this is going to be quarter. And I can just grab the start date over here. And you can see that it's already going to bring that entire expression down here. So I want the date trunk quarter part. So that's that continuous date part, right? Like that, if you just took date part, that would just give you back the quarter. But we want date trunk, which is just chopping off anything that's at the week or day level or month level. And I'm going to do the same for over here for this quarter on the order date. And then so this is going to give us a difference from that first order date. So let's just grab that. And I'm going to turn this into a, well, let's just drag it up here so that it's a dimension now. And then we're just going to replace our columns. So now we have, this is the very first quarter. I keep want to say month, but quarter that they're doing business with us. And then this is everybody who 1 month in to our relationship and so on and so forth. So you can see after 15 quarters on the 16th quarter, essentially, this is, if you just skip this first one, this is 15 quarters after the first purchase. 66 of our original 121 clients are still there. So this is great for looking for where are all of our purchases, repurchases coming from, right? Because this is saying that this is the first quarter that they had to order. And in these subsequent quarters is going to be where other orders occurred. And so we can see what is our retention in terms of number of clients over time as we look at this. But this is just the raw customer count. So let's just call this customer cohort analysis. So this is a customer cohort analysis, okay? And this is useful in and of itself. Just take a look at where we are potentially creating more sales and why is it that more recent periods have less sales. And so we can start to look at different time periods, maybe fourth quarter or a third quarter generates different patterns or maybe different years. So you can start to see different trends over here. And then you can also take a look across over there. But this isn't that great an analysis right now because we don't have a percentage calculation. It's very hard to calculate this apples to apples. So let's go ahead and duplicate this. And this one is going to be our customer cohort retention analysis. Okay, so the other one was a raw cohort analysis. This is going to be a retention. So what we want to do here is I'm going to right click on here and we're going to create quick table calc. Excuse me. And we want to do a percent. Let's just do this in here. We're going to say percent from, and we're going to say first. Now we do that, we should see that this gets a little bit messy, and that's because there's zeros over here. But what we can do also is we can come back over here to our format, to our numbers, say percentage, and we'll say 1 decimal place, and we'll grab this. We'll drop a semicolon. We'll do a minus sign for the negative, and then we'll just do a blank over here, right? Double quotations, and those are the 0 values. And what that'll do is that will blank out the values that are 0. So that's a way for us to just kind of clean up our chart a little bit and remove it. It doesn't get rid of the coloring, but I think we'll live with that. And so you can see now where are some of the highest retention periods. And so you can see that there's, and let's see, something looks a little bit off. Okay, so our color, let's click and control drag that onto our color so that we're using that for our colors as well. So we were using raw counts. We want to make sure it's consistent. We're using colors. Another way to do that is just take this off, click on this over here, and use our labels. So now the colors and the labels are going to be the same values. That's just another trick for you guys over here. I can do the same thing over here. Click that. Now I don't actually have to have it on the label. It's just going to grab the value from that. So we only have to change the calculation in one place. All right, so this is our retention analysis. And so we can see this particular quarter right here has pretty strong retention. So whatever we're doing over here seems like it worked pretty well for this period. So it'll be interesting to see how this continues to go forward. Now, when we look at some of these other periods, now we're able to see, okay, how many of these are performing as expected or underperforming. And so one way you can do this is you can take the average of each one of these columns and figure out what is your average retention for each period across these different elapsed quarters. And then you can take that and say, okay, if we're not at a particular level that we should be, so if this one, for example, if this 33% is underperforming, then what can we do different to increase it for the subsequent month, so on and so forth. And maybe there's not a lot that you can do, but you can just analyze who are you targeting. Maybe it was the clients that you're targeting that have better retention across the board. So this is just a way for you to take a look at what was happening in these different quarters and how's that affecting the long-term retention, because the type of clients that you target at the beginning is going to affect the retention later on. It's going to affect the quality of client that you're generating. All right, so let's keep building upon this. So I'm going to duplicate this once again, and this time we're going to go into our next one. So let me go back to our presentation. We're going to do net revenue by cohort. So I can just take and replace, excuse me, this value over here and replace it with sum of sales. And so just like that, we can do our customer cohort net revenue. And technically, this isn't net revenue because we do have discounts over here. And I think there are returns as well. And you would calculate and include all that in your net revenue calculation. But we'll call this net revenue by cohort. And so very similar to what we just did with our customer cohort analysis, this is going to show you what you did in the very first quarter in sales, and then what you did in subsequent. And again, this is useful in and of itself a little bit in terms of being able to see absolute dollar values. But what's often more useful is going to be comparing it by percentages. So we're going to do the same type of calculation where we're going to do net revenue retention, net dollar retention. The net dollar retention over here, aka NDR. Right? And this is, let's just remove that little 2 over here. And so these calculations are very, very easy to do in Tableau. Once when you've done this a few times, it's fairly straightforward. So we're going to do the percent from total, or percent from, and then we're going to do first. And that's going to generate that same calculation that we had before. And then we're just going to right click on this again. Formats, come over here to our percentages down to 1. And I'm just going to copy this. And the reason why I get to percentage first is that it's going to give me that sample format, and that way I can just copy and paste it. So that's why I don't go straight to the custom. I go to percentage first. Just another little trick for you guys using Tableau. So once again, we're able to build this really, really quickly. Again, this stuff is very, very fast and easy in Tableau if you've got your data formatted the right way. If this is something you want somebody that's an expert in this to do, I'm always happy to help you guys with that as well. But you can see now there's certain periods where, hey, this is what we did the first period. We've got over 100% in this period over here. And what does that tell us? That this particular cohort did more sales in these subsequent periods than the first one. And so these are extremely profitable clients in terms of percentages. In absolute dollars, we can come back over here and compare it, and we can see they increased 700 and 675, and we can see that compared to these other cohorts over here, it's not as much nominally. But when we go down to the customer level, that's where we're going to really find out whether or not they did a good job of marketing to those particular, how good that cohort is, or how much those customers are worth from this particular cohort. All right, so let's keep on going. The next one, before my my throat wears out and before I lose my voice completely, cumulative lifetime revenue by cohort. So this is going to be, so I'm going to take this one, the one with our revenue, and I'm going to actually do a little bit something different. I'm going to create a calculated field over here. And what I really want, and I'll tell you why I'm doing this, it's because of all these blank values down here that's going to give us some issues. So I want, what is this? Cumulative revenue. So we can say window sum, and then this expression is going to be sum of sales. And I'm going to say first, and then this is just going to be 0. So this is going to be whatever the value we're on right now is. So let's go ahead and hit OK. And so that is going to fill the whole chart out. So I want to get rid of all of those ones that are not there. So that's why I'm doing this custom calculation over here. So that calculation looks like it's working as expected. You can see these numbers go all the way across. So right now I want to find out if, look up sum sales. I'm going to say is null. Then what do I want it to display? 0. Else this and so let's apply that and see what that happens there. So that populates all of those as zeros. And I do actually want these to carry over the previous value. And so I'm going to do and I'm just going to copy this. And you can tell that I've definitely done this before in Tableau quite a bit. Table calculations. And so now, because I'm doing a 1 is going to reference just one more cell to the right. In this case, because we're going table across. And so I'm saying if the current cell is null and the next cell is null, then return 0. Okay, and so in this case, the next cell to the right is not null. And so we're just going to return back the previous value. So it's going to take that Windows sum, right? So that's a running total essentially, since it's calculated across. Excuse me. So that is going to give us that cumulative revenue. And then we can do our same trick over here with our format where we just say, let's grab our numbers, 0 decimal places, come down here and get rid of all the zeros. So this gives us our cumulative revenue by cohort. And so this is telling us essentially that these clients over here have generate more revenue as a cohort than this cohort. And so this one is very, very profitable. And it's only 14 quarters in versus this one's at 15 quarters. So this cohort right here is very, very profitable. Again, we can see this one is very profitable compared in the same period. This one is underperforming. So everything in 2019 did very, very well in comparison. And then we can say, okay, everything in 2020, in comparison. So we can say, okay, how did these cohorts do after their first year, right? And we can just go down fourth quarter or the fourth period over here. So this is the first quarter, or actually this is the fourth quarter right here. So we can just say, this is how they did in their first year. All right, so this did a lot better in the first year. These come down and then boom, this goes back up. So we're not sure what happened in Q2 of 21, but these clients and this cohort are more profitable. This cohort, I should say, because now we want to break it down by customer. So I'm going to come back over here and we're going to say, this is the cumulative lifetime revenue. And then next we're going to calculate the customer lifetime revenue, right? So this is we'll call this cohort cumulative lifetime revenue. And the reason why we want to distinguish that, and I'm going to duplicate this, is because when we do customer, we're actually going to divide this by our customers. So now when we come over here and say, what I want to do is duplicate this calculation. Whoops. I'm going to edit this over here. And we're just going to divide this by our, how are we going to do this? All right, I think, let me rename this. what is this called? All right, there we go. And let me just double check those. I'm going to drop this over here, count distinct. Let's turn that into a discrete value. Actually, we need to create a different calculation, actually. We want customers per cohort. So we're just going to say, oh, what is this going to be? Fixed first order per customer. And we need to take the quarter part because this is going to be the date part, right? So date trunk quarter. So that means for the quarter period part of that first order date, we're going to grab the count distinct customer name. And so that's going to give us that unique count over here. So let's grab that. Let's put that over here as a discrete value. And now you can see this is how many customers that we have. So I want to revise this calculation over here and make sure that we're using that calculation. And I'm going to say average. And okay, so it looks like the calculation stayed the same, which I just want to double check that. So you can see that it was much higher over here because it was divided by the number of clients that were just from that particular period. Now we're starting to get to, this customer lifetime revenue number. So you can see that this cohort over here per customer generated this much revenue. And then you can look from elapsed quarters to see which cohort is performing the best on a per customer basis. So this is where you start seeing really, really interesting metrics because, again, we see that quarter 2 of 21 is standing out really, really strongly because you can see that these different periods over here, it outperforms everything in the same column. And so you can see that this cohort is very, very strong, very, very performant, and it does 2,880 per client. And for some of these other more mature cohorts, you don't reach that point until quarter 10. So it takes almost an entire year more to realize the same amount of profit or same amount of revenue per client over here. And then so this is how we would calculate cumulative lifetime revenue. Now, what is the difference between cumulative lifetime revenue and cumulative lifetime value? Right? So when we start looking at customer lifetime value over here, this is where we're going to actually modify this once again, and we're going to take, there's a couple of different ways to do it. It depends on your data, but this is where we're going to actually find out how much a client is worth to us. So the revenue shows us how much money we gross, the sales that we generated. Value is going to be how much we actually net at the end of the day. So there's two things that we need to have. So the first thing I'm going to do is create a parameter. So let's create a parameter over here, and we'll just call this gross margin. And yes, I know in this data over here we have profit. We could calculate and use that number, but I'm showing you guys this example because this is sometimes something that you have to do when you're working on this type of data set with your clients. and you might have to calculate the margin. And you might have to create a parameter to manage that margin. So let's just say, for example, 65%, 0.65 is the gross margin. And then we want to create another parameter, and this is going to be our CAC. So CAC is client acquisition costs. And we'll just say float. We're going to display it as currency, custom, 2 decimal places. That's fine right there. So let's just go ahead and show that as well. And so let's just say that our customer acquisition cost, client acquisition cost is $500. And so now we're going to modify all of this. So we're going to take this calculation over here, and we're going to duplicate it and then edit it again. And this one is going to be lifetime value. And so to get our lifetime value, now I'm just going to multiply by our gross margin. Okay. And if this was a true net revenue dollar amount, we would just remove all our discounts, everything. Gross margin is essentially after cost of goods sold, when you take out how much it costs you to actually produce the product. It's not after your operation. So we're just going to apply that, update that, and then we're just going to replace this value over here. And so you can see that these numbers are lower than our other ones. So it's been reduced by that down to 65% of what we were starting at, but everything else remains the same. And so that's very useful to see that the comparison scale is still very, very much the same relative wise. But now what I want to do is move this back over to our labels. And for our colors, instead, what I want to do is create a different calculation. And I want to say, I want to find out, is our clients profitable or not? So profitable yet. So I'm just going to compare it to our CAC. So this is customer lifetime value greater than or equal to CAC. And so I'm just going to drop that to our colors over here. Table across. And let's change these to bars. And we'll just say min 1. Okay. And so now we can take a look at how our different cohorts perform as it relates to our CAC, or customer acquisition cost. And so now, by looking at this particular chart over here as it compares to our cost for acquisition, we can start to see, hey, which of these cohorts are actually profitable? And let's flip this around. So let's just say that is so false. It's going to be red, and then I'm just going to make those. Okay, so this particular segment over here would be very unprofitable, and so whatever we did or wherever we acquired these 3 customers would be something that we want to review. And same with over here on Q2. So it might be our product offering or mix, and you can see majority of our clients are not profitable until the second full quarter. You know, a lot of them don't get profitable until that period. And then just about all of them are profitable when they get into 3 quarters after their first quarter's purchase. So it takes about a full year before our clients are profitable. But after that, you can see that they're generating a good amount of profit for our organization. And so you can do a couple of other things with this. You can take a look at this after you subtract out your CAC. So you can see that you're losing money in these periods over here and by how much. And then you can compare that and build a profitability chart over here and show your customer profitability by cohort. So I'm not going to build that one out. I think you guys can figure that out. That might be a challenge and a takeaway for you guys to do next time. And until then, hopefully you guys have found this useful. As always, if I can help you in any way, feel free to reach out and ask. If you like this video, please be sure to like and subscribe. Drop me a comment down below. Let me know what you want to see more of and if this has been valuable to you guys. So until next time, take care and God bless.